Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday, the 26th of February, 2026. In a nutshell, I think the meeting between the U.S. and Iran did not go well. The fact that Steve Witkoff left the meeting to deal with an Iranian issue and then had to come back later, sort of a slap in the face. I mean, just think about it. You have the biggest armada in the Middle East since the Iraqi war. The Gerald Ford Group arrives tomorrow. We have 22 jets just alone sitting in Israel. We'd never do that. And there's just more and more going on. So we have jets, we have missiles, we've got destroyers, we've got everything we need there. And this meeting, it continues to be that the Iranians say, respect us, trust us. There's got to be an element of trust. And no, we're not going to give up enriching uranium. It's a red line for us. We're not doing it. We're not going to give another country the grade that we had to 60. We'll dilute it ourselves. But in the meantime, even just since the 6 months have gone on where the, the IEAA, the IEKKA, it's one of the nuclear groups. They have barred them from coming in and looking at anything. Now, take the Western point of view. Are you kidding? That's it. So all I can say is I hope that it doesn't lead to conflict. I see no way out of it. I had a 90% chance yesterday. I'm now 99% certain that the U.S. is going to strike Iran. That does not mean I know what I'm talking about. I am not a military guy. I just read a lot. All right. So in looking at it, we were down early in the metal markets. We came back late in the day, and we're extending some of that rally. You're down in the stock market. Stock market got beaten up pretty good today, but I'll deal with that in the Spider ETF market. You're getting bids in the bonds and the notes, which I'd expect. You were down early in the energies, and you came back late, and we'll look at those charts. So let's go to the marketplace and see what we've got. And by the way, maybe we should take a look at one thing before I do this. You're going to get the PPI numbers for January at 7:30. You're going to get the Chicago Manager Index PPI Friday at 8:45. That one's expected to be down a little bit. Okay? So coming back to the charts that we were just talking about on the S&P, now you're down 0.5%. It's been a market that's just doing this, and I think you see the wavering here, and that's just what's going on. The market tried the up 2 days ago, gave back a bit, and tonight not able to get back positive. The pattern is still one where you've got higher lows on the swing line and higher highs. The 18-day average of support and the 100, you fell back into them, and they're holding. So is there a chance for the market to recoup here and stay bullish? There is, as long as you don't come down under this low. If you start taking out that low, you've got a different issue. Has the market been able recently to get to a Bollinger Band or get away from that 18-day average and 100? Absolutely not. And the market is now neutral in momentum. So bias down, swing line up, momentum neutral. When we come over to the NASDAQ, you keep going to the 18-day average and you just can't stay over it. Market keeps pulling back. It was hit hard today with NVIDIA losing quite a bit. You know, Salesforce also got hurt pretty good. We're seeing CoreWeave down. I believe they were down in the aftermarket tonight too. When we take a look at the Dow, it too is now under the 18-day average. So we've seen the market that tried to go up on a Wednesday roll back over right through here. The only part of it that's staying friendly is the Russell 2000, which is still above the 18-day average. It still has the momentum to the upside. It's got the swing line, but the momentum is neutral. It hasn't turned down yet. It could really easy do that tomorrow. Very easy. In the DAX, I just said to you 2 days ago, I think this market's going to find the buyers at this 18-day average. Look at this. You've now gone through that high. So money's moving out of America, and the breaks in the DAX and other of the foreign currencies, stock indices, are continuing to find bids. When we look at the notes, as you can see, you're moving up with an embedded reading. Let's see how far this can go, but it is in an uptrend. In the 2-year note, we're getting up to the point just now, literally just now, it wasn't here a few minutes ago, where the high today just took this out. So now the market has proven that the support was here. You now have a higher high and a lower low. So I'll remove that arrow from red and have it pointing up. It just happened. In the dollar index, the market is going sideways, trying for time to embed and make a decision. Does it have the power if something happens negative to get a dollar bid to kick the market up to through the 200 to the Bollinger Band and the 100-day average? Would an attack on Iran do it? The market will tell us. My instincts are initially doesn't have to. The dollar is a strange vehicle. As a chartist, you got resistance there. Do I think we're going to attack Iran? I do. So it's hard to play it. I was looking for a comeback in the eurocurrency, and I got it today. You're right back to the 18-day average. So the break into the 200-day and through here came back up. Very good action. Japanese yen acts to me like it might want to come back up here and challenge that 18-day average. It's too oversold to sell. It made a move, but it really never got down to the Bollinger Band again. As we take a look at Bitcoin, this is the February. Now, this is the last time I'm going to show it to you. Market goes off the board tomorrow, so we'll be moving into the March. Notice how it just stuck at the resistance of the 18-day average, and that's where I thought it was going when it lost. Right through here, it's bearish embedded reading, and that was the bet that I had made with you, telling you that's what I thought would happen. So when we look at the Brent, you can see you have an outside day down and you close down 10. Now, you came well off the lows of the day because the market got to 69.32 and settled at 70.75. But it's still pretty far from the upside. The Bollinger Band has stopped this rally each and every time it's gotten there. You did a little better in the crude, WTI, but another outside day down. You know you have a problem, the way I teach outside days, that if you take out today's highs in either of those, the odds are they go right to their Bollinger Bands. It's at least what the odds are. You have an upside day in the rebot gas, just the opposite, and developed a bullish embedded reading. I still am in the bull camp in that market. And in natural gas, you're going to get weak enough to fall to the Bollinger Band with an embedded reading. I certainly hope so. If you're a bear, that's what I'm still looking at and could expect it. So we'll see if the market gets a jolt one way or the other, if something bad happens over the next few days. But how do you attack these markets? One of the ways is via pivot points. And pivot points are a technique where there's a formula that uses the previous day's range to look in the market for a center line. And from that center line, you're looking for sell numbers above and buy numbers below that line. I tie it together with my slow stochastic. And I have found over the years it really turns this around. It gives you a much better edge than just selling those numbers because it's telling you, are they overbought or just getting going to the upside, or are they embedded? Nah, then you don't do it. So I add something to it. It's a free course. I want to make that clear. So if you'd like to take it, all you do is you go to iraepstein.com and under free. The free offerings is where it's at. It's not in the course area. It's in the free offerings. It's a 3-part video series. It shows you my interpretation of how you work with it and where it goes. You go to iraepstein.com. You can click up here. You can click over there. If you're on YouTube, it'll take you right to that area. I'm Ira. You have yourself a great day, and I'll see you in the other videos and first thing in the morning. Take care.